you don't only need to prove that quantum can be faster, you need to prove that it can be faster for tasks that are important at scale. What we mean when we say deep tech, whether it's software or hardware or a mix of both, it's the sheer belief that the research that the team is doing can compound, can allow them to create very unique solution that is 10 times or 100 times better than the next best alternative, and it's not easy to quickly replicate. So one of the things that we're testing for is, yes, you are extremely technical, but where are you coming from? Are you coming from, I found this problem very cool, or I always dreamed of solving X? Or are you coming from the point of, I want to build the biggest player in this space because I know that in order to make the biggest impact with my technology, I need to be everywhere. And if I'm not commercially successful, no one cares. Eventually, the entire deep tech story is about simplifying complexity, to my first point about why complexity, I believe, is so important, and telling the story in the right way to different stakeholders, employees, getting them excited to join something that is going to fail with 97% probability.
Welcome to the podcast, everyone. Today, I am super excited because we're sitting down with Sasha Vidiborskiy, who is a partner at Atomico, a London-based venture capital firm with over 5 billion in assets under management. And they, of course, invest from seed to growth across Europe and beyond. At Atomico, Sasha focuses on deep tech and has led investment in companies like Lace Lithography and Lakera. Before joining Atomico, Sasha was a senior associate at Runa Capital and earlier started his career in quantum physics research, which I think is the perfect segue into today's conversation because today it's all about how Sasha thinks about deep tech investing.
This show is not investment advice, and the hosts of this episode may be invested in the funds and companies featured.
I said we're going to talk about all about deep tech investing. And to those that know me, I think we'll also know that I'm going to give you a bit of pressure here because I'm always saying, deep tech investing, generalist, there's a lot happening. Can you really be a generalist investing in deep tech? You, of course, are no generalist, but Atomico is. So that's what we're going to explore today, how someone like you is shaping how Atomico is thinking about a new and growing space in Europe. First and foremost, talk to me a little bit about the importance of your journey from being a quantum researcher to now being an investor.
Yeah, I think it all started even earlier than that. I'm originally from Moldova, quite a small country, and squeezed in between Ukraine and Romania. And I think as one of the former Soviet republics, there were two paths you can choose. You can either go and do what is most of the people who do there, it's agriculture, it's services, it's banking, or you can try to go and do hard science as a way, hopefully, to manufacture for yourself a social lift. And for me, I definitely gravitated more towards hard sciences than farming. So decided that I would do something that sounded cool at that time. My first background, I was actually a material scientist with a focus on materials for electronics, and then got pulled into what eventually became quantum computers. But unfortunately, 15 years ago, quantum computing wasn't a field that many people could get excited about. I don't think that anyone called it quantum computing. Obviously, there is a bit of storytelling here in terms of what the industry eventually became as the components of quantum computing have matured. And now, you even see like companies going public and being public in quantum computing.
Sasha, I literally 2 hours ago did a big conversation with Andy Lever from Notion on quantum, and you're nodding here because you know him, of course.
Yeah, and it's like the fun fact is we still don't have yet a fully functioning and kind of utility scale quantum computer. Let me get your take on this. Andy believes that, and he quoted Google for this, but he believes that we will probably have quantum at scale in 2029, and then we will have a conversion of quantum and AI being applied together in the early 30s, which is the time at which he believes we're going to see a massive unlock. And that's where if we don't get AI sentience at that time, because it's just not baked into the models, we will have something that feels like it because AI can move so fast because it's able to compute at a completely different rate that is completely unfathomable today. Yeah. I think quantum computing timelines is this kind of questions where if you ask someone at any point in time, they'll give you the answer that is 5 years away. Whether it's 5 years from here or 3 years or 10 years, I personally feel it's very hard to say. Why? Because I think the goalposts of what quantum computing utility actually means is moving. We invested, and this is to your point about Atomico being a generalist, we have been investing in deep tech for over a decade, including some of the early bets in quantum computing. So we invested in a company called PsiQuantum, which is now one of the biggest private quantum computing companies, and we invested in 2018. So that was like 8 years ago. And if I look back at our original memo and just contextualize it, definitely we were right on many things, but we were wrong on the timeline. And that's probably a cross-cutting theme in deep tech, just appreciation how long things take. So if I go back to quantum and the timelines for it, the goalpost has been, can you show quantum supremacy? Which basically means, can you show that quantum can do computations faster or more efficient than another class of compute, typically CPU or GPU, for a specific class of tasks, right? And there will be like benchmarks and so on. And Google proved that quite a few years ago. It was like 5 years ago, 4 years ago. A core piece of our investment in PsiQuantum and the team's belief is you don't only need to prove that quantum can be faster. You need to prove that it can be faster for tasks that are important at scale that is important. And what they say is they are going after not just a quantum computer, they're going after utility scale quantum computer. So if you ask me about, when will we see quantum compute being useful? Yeah, maybe it's the next 3 years, but when would we see a huge cluster that, discovers new materials or helps with encryption or optimizes hedge fund portfolios? I think that's probably a few more years away. And I'm a bit hesitant to say how many years, but probably a few more.
Yeah. And I think that, honestly, by diving into a conversation about quantum here, we made it clear to everyone how your journey has shaped your investment framework today. Anything you want to add to it, though?
I think for me personally, as I was investing and as I was thinking about what resonates with me, but also what resonates with founders, because eventually as an investor, we are serving founders, and you need to be very mindful that there will be types of founders or types of opportunities for whom or which you can be a better fit, and therefore you have higher likelihood of winning their hearts and minds, but also being more useful to them versus other founders and other opportunities. And for me personally, as I spent quite a few years in academia, grinding pretty cool but challenging science, for me, that ability to navigate complexity has probably become a core theme of what I look in founders, what I personally get excited about, like sheer complexity and ability to build something that is a simple solution for very complex problems, but also ability to communicate that complexity. So to your question around how it shaped my journey, definitely has shaped what I tend to spend time with and who I gravitate towards. The best founders that I've worked with, they work on the biggest problems, and those problems in many instances are multifaceted. This is not something that you can solve with one specific product, one specific approach. And that complexity is probably my thesis, both in terms of why I invest in certain companies, why I get excited about certain companies, how we navigate that complexity, how I can help founders to get that complexity, to get through that complexity, and how as founders, you need to be communicating that complexity so that the world understands. So to summarize it, probably complexity stemming from my experience in academia is the theme that I kind of, in my mind, keep at all times, pretty much, every day that I do work at Atomico.
Yeah. Sasha, I want to try and tease out your framework for investing in deep tech. And the reason why I think this is relevant is because a lot of people are painting themselves as deep tech investors today. And deep tech investing can mean many different things. Some would say, well, I'm investing in an AI application thing. It's using machine learning. Machine learning is definitely cut off the, and then for that reason, I'm a deep tech investor, and that's what I'm going to go out and say to the market. And others would say, I personally love the IQ Capital's approach, where they're saying, if you can bring together 5 of the best people in the world in a space, and they can build what your solution is doing in 3 years or 5 or whatever is the number they use, then it's not deep tech. I like that. It's very, like, we can all get it. We can all understand it. What's your take?
It's a great question. I remember vividly we had one IC for a company that is in the developer tooling space, like it's an infrastructure for developers. And I remember in our IC discussions how, because it was very complex product and it felt very deep in the developer tooling stack and the kind of infra stack, people by default were asking, does it mean that they have a moat? Because it sounds complex and therefore probably it's harder to build. I inherently don't believe that there are pretty much any moats in the tech itself. Anything in my mind can be rebuilt with proper resourcing, with proper motivation, which is a critical piece, and proper amount of time. Even if you think about the most sophisticated things, they can be built with these three things in mind and at hand. Obviously, patents and other forms of protection help, and there are entire industries like pharma and so on that have operated on this. But in startup world, it's very hard to build something so unique that no one else will be able to build it. Obviously, now it gets to a question like, what then can you do to make your approach more defensible, which is a separate question that very happy to dive into. But if we think about how we define deep tech, we define deep tech as an industry or a set of industries and verticals and approaches where investment in R&D can fundamentally make something more defensible rather than less defensible, and it's something that compounds over time. So in practice, what it means, if you look at the P&L and balance sheets of like SaaS companies versus deep tech companies, SaaS companies also spend a lot on R&D, and we're talking about anywhere between 15 and 30% of their OPEX spent on R&D. If we look at deep tech, we're talking about 30 to 50%. And then the most important piece is not only spending on R&D, but seeing how that R&D spend compounds and allows you to leverage that R&D spend to do something. It might be distribution, it might be product building, it might be network effects, it might be something else. But eventually you want to see that what you invest into allows you to build deeper defensibility. I don't, once again, believe that it's a moat in itself, but it makes something much harder to develop. And if you think about, some of the biggest examples like Apple, no one thinks about Apple as a deep tech company, but it's a deep tech company because why cannot, a random company with a lot of capital replicate what they have? Because they have invested a lot into the processes, into the R&D, into the patent portfolio, and a bunch of other things that allow them to stay ahead of others. On the other side, it might be like Saudi Aramco, right? Once again, oil and gas. You wouldn't think about oil and gas as R&D industry or R&D kind of focused industry. But once again, for them, the ability to extract oil and refine it and transport and sell is based on multiple years of hundreds of billions of dollars invested. So for us, what we mean when we say deep tech, whether it's software or hardware or a mix of both or something else, it's the sheer belief that the research that the team is doing can compound, can allow them to create very unique solution that is 10 times or 100 times better than the next best alternative. And it's not easy to quickly replicate. It can be replicated, but not probably as quickly.
Let me just double click on one thing, because you said 30 to 50% of the money is spent on R&D. This is at the seed stage? Just to clarify to anyone that's listening.
No,
and saying,
I mean, it will be there. Like, I appreciate when I talk about numbers, I need to be specific what they refer to. I think 30 to 50%, it's, if you think about like scaling company, and we're talking about, potential hundreds of millions of invested, maybe that is a good mark. That's where you start investing a significant portion of that capital. Obviously, as a proportion of your spend, it might be bigger or smaller in the early days, depending on what the company is focused on. If you're, at seed stage, you're 5 people and you have like 3 million budget, so to say, of course, your scientific R&D can be a big proportion of that, can be like 70%, 80% if you need to buy one tool, right? That would be R&D spend, CapEx. So from that perspective, it's kind of, the devil is in details, but it's more directional. How are you thinking? Are you thinking about go to
It's
market.
more when you're thinking about how the company will evolve over time.
Exactly.
What trajectory are we on? Are we on one where it's distribution that's going to be giving us our moat,
Yeah.
or is it one where it's the research and development that's going to
That's
to
exactly
yield it?
right.
Yeah. Okay. I wanted to clear it up in case anyone was thinking, well, blah blah blah. Don't try and be devil's advocate against someone who's trying to explain a complex framework here on a podcast. I want to ask you then, second thing here, it's a question that's close to my heart, and it's what founder attributes do you believe are really important when you're investing in deep tech companies? And also, how do you assess that? And I ask that question with great curiosity because I used to actually be a bit of a chief of staff type role in a deep tech fund, and we kept, the fund was incepted by the government in Denmark to basically help those companies that were spinning out of universities that were not getting funded by the private market, and then there needed to be this actor in between. Very often, it was founding teams where there was lacking a commercial profile, and then a commercial profile would be brought in, and I kind of always cringed a bit at that because I was like, that has to sit with the founder. You also know, and I think we've learned that a lot in the past years here in Europe, the importance of having the CEO be very technical, also in terms of being able to talk to customers. It really, we just see a very close connection between the technical expertise of the CEO and the success of the company, while still the CEO obviously needs to be commercial. But you can't oftentimes it's very difficult to take someone without technical knowledge, deep technical knowledge, and put them in as CEO of a startup.
So the way we think about founders in the context of deep tech, obviously there are qualities that we look for in any founders, right? If you think about resilience and drive and passion and so on, that is almost like a base layer. I think deep tech, and that's where the nuances are important, deep tech brings additional flavor to the company journeys, because in certain moments of company formation and pivotal moments for the companies, there will be things that will be critical. And if founders don't have certain skills or traits, it will be harder for them to go through those pivotal moments. Maybe just to start with one that you touched, which is the commerciality. I think the reality is if you are in a very complex and technical industry, it's more rare than not that you would have founder skill on the technical side. And that is fine. To your point, you need to be very technical. If you're CEO of a company that pushes the frontier, and we're not talking about marginal improvements, we're talking about like leaps in terms of whatever you're talking about, performance, it might be market sizes and so on and so forth. You need to be technical, but you also need to be commercial. And what I mean by commercial, you need to have desire to build a company, not to necessarily build a cool product or solve a technical challenge, but to build a company. And building a company, if you're a for-profit company, means building a commercial engine that will eventually make that company successful. So one of the things that we're testing for is, yes, you are extremely technical, but where are you coming from? Are you coming from, I found this problem very cool, or, I always dreamed of solving X? Or are you coming from the point of, I want to build the biggest player in this space because I know that in order to make the biggest impact with my technology, I need to be everywhere. And if I'm not commercially successful, no one cares. Once again, any caveats and so on and so forth, but you need to have that drive and desire to build a company. And that pretty much clearly comes through in the first couple of interactions that you have with founders, because when you ask about their, outcomes that they dream about, if you ask about what they're prioritizing in different times, you would hear, are they prioritizing what will eventually make a successful company? Or are they prioritizing something that they personally feel they need to do? Solve a problem, build a product, and so on and so forth. So that's number one. The number two is in deep tech, it's probably the most unexplored territory ever, because for most ambitious companies, you're doing something that either no one has done before or people think it's dumb to be doing, and you kind of need to persevere and push through and explore what can be possible and push that boundary. And while you're doing that, there are so many things that you can be doing that you need to actually know what to focus on in different times of company building. Are you now focused on like one customer? Should you expand to 10 customers? Are you focused on one application of technology, or should you expand it to 5 applications? Are you focused on building the product or talking to partners? And so on and so forth. And I know it sounds somewhat similar to what a typical company would experience, but with deep tech, because in most of the cases, you are building the frontier. And building the frontier means that no one knows what it is. So it's very hard to know what the signal is and what is the noise. So having that ability to focus and not be distracted by the things that will eventually not be important is paramount. And it's not easy to test for, because in early stages, by default, in constrained environment, people are focused one way or another. So the question becomes like, when they get that capital, when they get more time, are they going to be as focused? The third one is probably a piece that I already mentioned, which is desire to build something that is 100 times better than the status quo, rather than, oh, we're 30% better than the next best alternative. Don't get me wrong. If you get 30% more efficient motor, it still might be great, but not necessarily the type of investments that we're looking for, and also not necessarily the type of ambition that founders would have in pushing that frontier. And the last piece, which I think is very rare in technical founders, is ability to storytell. You mentioned like you need to be speaking to your customers and to other stakeholders. Eventually, the entire deep tech story is about simplifying complexity, to my first point about why complexity, I believe, is so important, and telling the story in the right way to different stakeholders, employees, getting them excited to join something that is going to fail with 97% probability, partners who need to see the product, but you don't have the product and you want to convince them that you're the right company to spend time on. Investors, obviously, fundraising is absolutely important, as it is everywhere, but in deep tech, you kind of run out of money sooner than you think. So therefore, being able to inspire people is critical.
Yeah. Now, I want to take you into understanding Atomico's deep tech institutional framework, so to say. In other words, how does Atomico deal with deep tech? But let me just preface this with something that might make it more accessible to founders to understand, why is this interesting? Why should I understand how Atomico thinks about this? I know quite a few deep tech investors that are either inside big firms or have been inside big firms, where it can be really difficult. Because if you're in a firm that has always done B2B SaaS or something like that, or primarily done that, and then you come as this deep tech partner, then you're automatically in an IC, an investment committee, battling against people that are used to look at different metrics and are used to hear different stories, used to oftentimes also see more presentable founder types, if we should be so coy to say it like that. And they love that they can say, no, look at it. My stats are this. It'll grow like this, because that's what every other B2B SaaS company has ever done in history, and it's going to be like this. And that's kind of what you're up against when you're then saying, yeah, but I got these 3 cool guys that are building this in the garage, and it's going to be amazing because we're going to get free energy. And for that reason, it's super important as a founder that you understand the dynamic within the investment firm that you're talking to. Because sometimes you might have a partner that's great, but that doesn't mean that that partner has an IC that necessarily understands you. And they might love the idea at seed stage, but when you need to do a seed plus and bridge to the next round, that's where it gets really, really difficult for a B2B SaaS investor, because the existing knowledge in traditional venture has always been, if you don't make the progress that you need to make, you're out. But in deep tech, oftentimes that needs to be taken with a grain of salt. Comment on what I said, Sasha, if you agree, and then tell us a bit about how Atomico thinks about this.
I'll probably start with the last piece, because I think it's important. In my view, regardless of whether it's deep tech or consumer or B2B SaaS, you need to show progress. And therefore, the progress definition, or the definition of progress, might be different, but there has to be some progress to get people excited, especially if you're seeking new capital. Getting back to the overarching premise of generalist deep tech investors and then deep tech inside of generalist funds, I think every fund is different. And my biggest advice to founders would be make sure that the partner that you are working with is well equipped to navigate the intricacies of their own fund, because there are funds that are very understandable. There are funds that easy grasp things. There are funds that would be on the other side of the spectrum. Eventually, you want to start building a relationship with your partner in a way to help them build that case internally if that is needed. I think it's not always needed, and I'll cover in a second how it works at Atomico. In my mind, because we've been investing for over a decade in deep tech, from quantum computers to flying vehicles to chips to lithography companies and so on, we institutionally have gained experience for a number of things that can go right, that can go wrong, what to
So I was
look
about
for.
to say, where are those flying cars, my friend?
I do believe that the pushing of the frontier comes with a risk. And that's a part of the model on our side, and that's a part of the model on the founder side. And we're super grateful to have been a part of some of the stories that didn't play out, because we do believe that if they played out, we would have been so better off. This is a slight detour, but I can give you a specific example on the flying car company that you mentioned. I was in one of the boards where they were discussing the future, where everywhere there will be like flying cars and we'll be commuting from downtown to like central parts of the city in flying cars. And my little son, who was at that time, I think a year and a half, maybe 2 years, walked into the room and he was like pretty cranky. So he sat on my lap and he was watching that board meeting. So let's fast forward 20 years from now. He would have been, if successful, he would have been in that flying car. And I would have been telling him this story that he was in the room when the history was made. We know what happened. Eventually, companies fail. And that's, once again, that's a part of the entrepreneurial journey. But I do believe that you need to dream big in order to change things significantly. And therefore, you kind of need to take that risk. And we institutionally, and I'm kind of getting back now from the detour.
No, let me just add a comment to it because I made fun of it, but you're absolutely right. And I think Europe, as an example, we learned, or at least the media and mainstream Europe, learned the wrong lesson from Northvolt as an example. Like Northvolt is not the reason why our pension funds and large asset allocators should not be doing direct late-stage investing. It's just another outcome in venture, and sometimes that's the route they go, and it is what it is. We gotta rinse and repeat, but unfortunately, we had a lot of pullback, we had a lot of bad stories on the back of it, and I think that the general public took away some bad learnings about how we should be investing in venture.
I completely agree with you. I think for me, the biggest learning is there are models that fit certain types of risk, and we need to be mindful of those models. And not always all models mean that you can kind of skip a step. And also, to your point about the wrong lessons, I think one of the biggest things that we internalize at Atomico is disconnecting the outcome from the decision-making process. And that's very important because it's very easy to be like, we did that and that led to an undesirable outcome, and therefore we would never do that again. And that's where in deep tech specifically, it's very, very dangerous because that's the path that would lead you to passing on the next generation company because you didn't necessarily have ability to overcome some of the scar tissue. And it's extremely hard, don't get me wrong. Like I have so much scar tissue that I'm still trying to heal in one way or another, but it's very hard. Getting back to your point and question about Atomico, because we do have institutional experience, and it's not something that we started doing recently, and therefore we still are exploring what are the feedback loops that we need to learn from. And that's the biggest thing in deep tech investing. Those feedbacks are so long. Like you might have a company raise round after round after round and then still not get anywhere because of many factors. But we have institutional experience of multiple cycles from multiple companies, successful and less successful. And therefore, our process is set up in a way that it still is the same kind of ruthless, rigid process of due diligence and opportunities as we have for any investment, but keeping in mind that you need to be optimizing for the vision and the upside and not necessarily get kind of bogged down by the downside and everything that comes with it. On a more practical level, I think it's very important to be developing internal frameworks how you discuss these opportunities. So first of all, what is the right level of details that people want to hear? If we're discussing, I can bring you an example. If we're discussing data center cooling, should I explain the entire stack of data centers and how cooling works today and what are the different physics of it and why it's not a fit for GPU heavy load and so on and so forth? And what's the right way to discuss it? Should I walk people through? Should I share something that people might or might not look at? And therefore, what we have developed is a very efficient process where, for me as a lead, I decide what are the core tenets of this investment opportunity that I bring in front of the partners when we discuss investment opportunities. And then they, if they feel that they have the right level of detailization, they feel okay with that. And if they have more questions, they ask me. But I think the second point is very important, which is you need to have trust within your partnership to then not be asking things that might not necessarily move the needle for the decision making, but might help you build trust that the person who is bringing opportunity to the table has done their work. I think at Atomico, we're very privileged to have built such a strong trust in each other that we then bring the conversation to another level, which is discussing those vision cases and then going down deep when it's needed to really understand what's the viability of that vision case. Now, what it means for me, it actually puts more pressure on me as a deep tech kind of lead and member of the IC, because then I would go and turn every stone in order to be in a position to answer questions when people have that, but also to say, you actually don't need to worry about this because we have done X amount of work and we have validated it. You don't need to understand how data center cooling works to trust the process that we have gone through. The other couple of pieces is you need to abstract from the details and see the big picture. I think that's the most important because it's very easy, as I mentioned a couple of times, to start discussing details which are not necessarily going to be helpful for the decision making. In most of the cases for our deepest investments, we do technical due diligence before term sheet. For us, giving a term sheet is almost like a, carved in stone contract. Unless something, like a red flag is discovered post term sheet, we almost always honor the term sheet because we do believe that that's almost like a social contract that we have with founders, and they know that we honor our word. In order to do that, we need to understand, to my previous point, we need to turn every stone and understand every detail for us to underwrite the right levels of risk. So usually for most of the non-deep tech investments, we do technical due diligence after term sheet because in most of the cases, it will not change anything material for us. But for deep tech investments, if the fundamental premise is could work, we're not always answering the question like, does it work? But it could work. We need to know that up front so then we don't end up in a situation where something big is discovered after the term sheet. And the last piece is versus B2B SaaS or other types of investments where we think about timelines and we think about capital needs and we think about milestones, we always put buffers in place. Because we want to make sure that we're stewards, good stewards of our LP's capital, but also we want to make sure that we have a good conversation with founders to help them benefit from our 10 years plus of experience, because founders, rightly so, are very optimistic. And our job as board members is to bring that rational part and help them understand what are the things that they need to be mindful of. So all of those pieces combined means that we rely a lot on experience that we have gained over 10 plus years. We have high trust environment internally, and that allows me and other people, not necessarily only on deep tech, on all of the opportunities, to bring opportunities to IC discussions where it's the right level of abstraction with the right level of expectations on the amount of work that had been done. And the third one is we underwrite the vision cases, and that's what we all get excited about. Obviously, not without granular view on what can go wrong, because we need to understand what is the source of risk.
Now, I want to ask you some Europe-connected questions. I want to ask you some macro questions. And I want to understand from you, how are you thinking about the past couple of years developments in European deep tech? Because we've definitely seen a boom there. We've definitely seen, as you also have been describing in this, more and more generalist VCs coming into deep tech. How do you feel about where we are in this stage of the cycle? What technologies excite you? Where do you think we have structural advantages in Europe that make sense to underwrite as an investor in venture?
We, as a firm, we have been pioneering this view that Europe has historically had a gap between the number of opportunities and the financing, and that's why Atomico started 20 years ago. And 10 years ago, in 2016, we have started this report, which you might have seen, State of European Tech, saw it.
Who, by the way, won Achievement of the Year at the EUVC Awards last year.
Exactly. And the essence of that report is to look at the structural shifts that are happening. So then, A, we can be more informed about those. We can help our LPs and the broader LP ecosystem get more informed and excited about the developments in Europe, but also give founders a perspective, what is happening and how do you need to think about your own company in the context of European tech. And one interesting thing, if you look at 2025 versus 2020, is a significant shift of capital from non-deep tech investments to deep tech. If in 2020 it was 19% of capital invested in Europe, in 2025 it was 36% invested. And if you compare that with the US, it's already more than 50% of what it is invested in deep tech in the US. And I know people like this comparison of like US to Europe. I don't always like it, but I think here it's important because Silicon Valley started as a mecca for deep tech, right? For silicon kind of supply chain and everything silicon related. If you look at some of the underlying trends in the adoption of deep tech technology, for instance, like robotics, in 2024, Europe was number 2 in the number of robots deployed in production in like real industrial scale. It was around 85,000 of robots. And then if you compare it versus US, it's 34K robots. The number one, the question is like, who's number one? It's China with over 300,000 robots. So the frame of reference is important because we tend to be looking at one region versus another, but I think it's just exemplifying that there are many pockets of opportunities in Europe where we are either ahead or on par or not that far behind. And therefore, I think it's very important for the narrative because founders are also subjected to narratives, right? If they don't believe that deep tech is a good place for them to spend their time, it might be a bit more challenging for them to start companies and to persevere when everything around is so challenging. We, in the last 18 months, have seen probably the strongest early stage deep tech funnel that we've ever seen. And also, if you look at the last 3 years, how much capital have been invested in pre-Series A, which is our, so to say, top of the funnel, it was around $1.4 billion. So if you think about average check of around 10 million, which is on the higher side, you can kind of quantify it by quartiles and so on and so forth. But that's a lot of capital, and therefore the company formation is very, very strong. And the reason why company formation is very strong is because we have what we believe is a very strong talent flywheel, where you have second generation alumni from billion-dollar companies starting new companies. Think of like DeepMind, right? Mistral, H Company, Runa AI. Think about Celonis, Darktrace, Oaken, and a bunch of others that churn you very experienced founders that now go and build products and solve some of the most ambitious problems. So when we look at what we are excited about, and we're very data-driven, so we look at the top of the funnel, we look at the macro tailwinds that some of these industries experience. We also look at what are the models and capital journeys that fit our model of underwriting venture scale return. We have identified 5 areas that we will be spending most of our time within the next couple of years, including our new fund. And those 5 are compute supply chain. We think about compute as a supply chain where compute in itself is a commodity that originates somewhere, transferred, and then consumed. We have been investing in chips, which is one part of the this supply chain, and recently laser lithography all the way to how to make applications more efficient. That's one big topic. The second is robotics. We've been investing in various shapes and forms of robots, from automating CNC all the way to automating warehouses for many, many years. The third one is space, where we have not done an investment yet, if you define space as going into the outer space. But obviously, we spoke about Lilium, and we have invested in another company that is still in stealth. We have been doing a lot of groundwork that will help us then see the opportunities that we get excited. Energy is a big area for us. I'm on the board of a company called TEM Energy, which is a UK-based company, raised 75 million from Lightspeed recently, where they connect suppliers and generators of energy. And we believe in the market where AI sucks out energy from the grid, everyone else will be facing like a rise in their bills, and therefore there has to be a way to bring that bill down. But we have been looking at everything from fusion all the way to batteries and other ways to create more efficient energy systems. And the last one, and the one where for me as a material scientist, I would have not expected to be spending more time, but I have been spending the last 12 months looking into the materials, not necessarily investing in the materials themselves, but what those materials can unlock. Think of, the next generation of lubricants. Think of the next generation of magnets. What are the products and applications that can be 100 times better, built on unique IP and knowledge of a specific material that either doesn't exist or doesn't exist at scale? And the underlying kind of cross-cutting theme that we're seeing in all five is that capital journey that I referred to a number of times, because one of the things that we have always been very mindful of, not every deep tech company is a good fit for a VC model, because as an early stage investor, if the company needs to raise a lot, you'll be diluted a lot, or you need to put a lot of capital at risk. But an underlying trend that we have seen in the last 3-4 years, and that's where I've been spending pretty much most of my time in deep tech and that horizon, has been with AI, you can make things faster and you can make things cheaper. And that not only applies to software development. We now see fundamental research when it comes to materials, fundamental research when it comes to design, and so on and so forth. So from that perspective, we believe that these five are some of the primary beneficiaries of the tailwinds in AI. And there is a sixth topic, which is broadly defined as bio, including healthcare, which we cover a bit differently, because we do believe that those journeys, both commercial and from the capital perspective, are a bit different. And therefore, I don't bucket them into deep tech per se, but we have been investing in bio and health for many years, including some of the companies that IPO'd recently or last year. So within kind of the universe of those six things, we probably cover most of the things that we believe are going to be transformational for the society, but also hopefully will provide outsized returns.
Fingers crossed for that. Sasha, we did not make it to talk at all about laser lithography, and I think that's the investment that allowed me to talk you into coming on the podcast. If you were to just spend the last 30 seconds here to say a bit about laser lithography, because I think it is an incredible case study of how you're investing in deep tech.
So what laser lithography is doing, they're building a new lithography tool. And for people who might not be familiar with lithography, it's a process of printing chips. It is at the core of pretty much everything that is around you. All of the chips in your laptops, iPhones, smartwatches, and so on, they're all printed with lithography tools. And there is one company that dominates the market with 100% market share of the advanced lithography market, which is a Dutch company called ASML. Depends on when you look at them and what is the frame of comparison, the largest tech company in Europe. And they have been dominating the market for many years because they used light in order to print chips. And they have built a very extensive supply chain and portfolio of IP that allows them to be the monopolists in the light-related lithography. They're facing a lot of challenges, specifically from the physics perspective. The capabilities of light are at the tail end, if not already hit the wall. Those machines are extremely expensive. They cost 500 million plus, the most advanced machines. They consume amount of energy as much as small city, and they're incredibly large. You need to have like an entire hangar for one machine, and it takes like 3-4 Boeings to transport that machine to the place where it's set. And the most important is they cannot make that many machines per year. And with the amount of demand for AI and advanced cloud capacity and chips, quantum included, we believe that we are at this perfect storm moment where ASML itself will not be able to cope with the demand, let alone to extend the capabilities of what exists today. So laser lithography is, we believe, the solution for it. They use an entirely different approach. They use atoms instead of light. Historically, it wasn't possible because with atoms, there are many computational challenges that were considered to be not solvable. And this team has been able to solve it with very smart AI and optimization techniques. And at the same time, they've been able to build on the hardware side, they've been able to build something that has never been done before. And we recently announced the investment, but most importantly, the team has presented at the biggest and most reputable conference. They have presented the first time ever someone manufactured or created a pattern with something that is not light. And in this case, it was atoms. So we believe it's a once in a lifetime opportunity to create something that hopefully will extend many industries beyond their current capabilities and market sizes, including potentially lowering the bar that it takes for a new fab, basically a manufacturer of chips to start, allowing many more people to be able to build chips from themselves, be that they're specialized chips or being, mass manufacturing chips that would be around you in your phones and beyond.
Wouldn't it be beautiful if Atomico backed a company that becomes a European decacorn that is doing so by utilizing atomic energy?
I think, that's one of the jokes that founders had when we were convincing them that we are the right partner. But I do believe that the potential here is more than the decacorn. I do believe that if you look into what can be enabled with LACE, I genuinely believe that it's once in a lifetime opportunity, obviously with many caveats, but we're very proud to be a part of the journey.
Or not even caveats, but things to jump over or cross, paths to cross through the journey. Sasha, thank you so much for joining me today. I hope you enjoyed it. I hope everyone who tuned in today enjoyed it. I certainly did. Thank you so much, Sasha. Thank you, everyone.
Thank you so much, Andreas. Cheers.